Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So we talked about Adobe not long ago, just to kind of briefly talked about it since they reported their earnings. So what I would like to do today is just look at again the information that's available to us and see if this company is now a buy, and then I will tell you at the end what I will do with the company, inshallah. And now there's a lot of community members that are basically interested in this company, so we'll do a quick update and then we'll take it from there, inshallah. If you haven't joined us on the Discord already and you haven't joined us on the Patreon account, please do so because it helps the channel. Like the video, subscribe to the channel, let me know if you have any questions. Of course, I genuinely appreciate all your support. Now I don't want to make the video any longer, so I want to get into this. As you can see, Adobe is actually down 13%. When you look at the S&P 500 and everything else is up about 9%. So the S&P 500 is up 9%, but as you can see here, Adobe is actually down 13%. And a lot of that is something to do with the fact that when they reported recently, I think they went down on that single day over 10%. So what I want to do now is just go over some of the financials and then share with you guys what I think about the company. And as you can see here already, the ratings from Seeking Alpha is actually all buy, which is interesting. So looking at the latest earnings report that they've reported, as you can see here, the digital media revenue actually went up about 12% from last year. So this time last year on year. So as you can see here, the digital media 12%, we've seen that now. The digital experience was also 9.6. Now when you look at the revenue quarterly, okay, so each quarter basically how they've performed, you can see it's heading the right direction from $3.1 billion to $3.8 billion in the last 9 quarters. When you look at the digital experience, it's also the same. So $1 billion to $1.2 billion in the last 9 quarters as well. Now looking at the creative cloud, 11% up year on year. Looking at document cloud as well, 18% up. So when we looked at this, I was like, okay, why was the company down? And a lot of it was because people were expecting the company to come up with some crazy AI scenarios, but they do have some AI they're investing into their company. And of course there are competitors now. There's a company, the OpenAI has come up with basically a software or AI called Sora. And Sora is this thing here where you're creating videos from text. So you write a text and it actually creates the videos. Now a lot of Hollywood actors and whatever studios have now said they are not basically looking at this and potentially to replace some of the actors and the animations and all sorts of things. So that the potential for AI is absolutely crazy, and for that reason Adobe is actually taking a huge risk. So when you're investing in this company, you have to take that into consideration unless they actually adapt. Although the CEO made a joke about it and said they can create the AI on Sora and then they can come to our platform and edit the software basically using our software. And I thought that's a very interesting way of looking at it. He basically, so that's one of the things that that risk is basically moving forward that faces this company. Just looking some of the other information. So the market cap is $233 billion. Of course, they don't pay any dividends, and earnings per share has been growing massively over the last 10 years. Free cash flow per share is also heading the right direction. Shares outstanding is declining, so they're buying back their own shares. And from $4.1 billion in 2014 to right now almost to $20 billion in the last 10 years, which is absolutely huge in terms of revenue side of things. And one thing I like about this company is this, I'll share that with you in a second, is this bit here. So total revenue for the basically for currently or 2023 was $19.4 billion, like we've just seen now. Now they spent the cost of that revenue in order to generate that $19.4 billion. They only spent $2.3 billion. That's absolutely huge gross profit of $17 billion. I really like this. This is why I rather invest in companies like this over Tesla. And I will show you, I've got a video coming out for Tesla I've just prepared. I will show you exactly what I'm talking about. So this company, they're in terms of expensive, basically in terms of the expenditure, the money they're spending on basically just to make that revenue is only $2.3 billion. $17 billion goes to gross profit. So of course, after taxes and the research and all of the things that they need to pay, we'll see how much that goes straight into net income, which is about $5 billion. So $5 billion of the 19 they've made, $5.4 billion is actually gone to the net income, which is really good. Then you've got your free cash flow, okay, and I'll show you what the free cash flow looks like for this company. Right now it has a free cash flow of $7.3 billion. So from 5.3 to 6.8 to 7.3 to right now almost to 7 to 7.3, which is absolutely huge. So a lot of that money is actually going back to the companies as a basically free cash flow, which then they can use to do whatever they want to do. And one of the things they're doing right now is buying back their own shares, which is wonderful to see. So they don't pay any dividends, so they're buying back their own shares. They probably think the stock is too cheap, and for that reason they're buying it. I like this. I really genuinely like this. So a couple of more things I want to share with you guys before I stop the video. Things like return on equity, we're looking at about 32%. Return on invested capital, we're looking at about 36%. Operating margins 35%. Or free cash flow margin of 33%. And check this out, net debt to EBITDA non-existent. Absolutely non-existent right now, because the company has a lot of money right now. Now in terms of looking at the Adobe in Morningstar, as you can see right now it's 4 stars, means it's actually cheap. It's discounted by 16% right now according to Morningstar. And like I've always said to you guys, I really like Morningstar because it kind of gives me that margin of safety, if you like. So even if you said, okay, I'm going to give myself 10% discount, that still will be 6% less than what you would have wanted to pay for. So $610 per share is what they will pay for. As you can see, it has a wide economic moat, and I'll show you how much they've returned, total return to shareholders in the last 10 years, and that's 22%. So you've got here a solid business that has returned 22% to the shareholders in the last 10 years. And if we try, even if we check out if this company, how it actually performed against the S&P 500, okay, total return, of course they don't pay any dividends, right? So in the last 10 years, the company has actually made a total return of almost 700 against 174. If you just look at the last 5 years, 96% against 81%. Not a lot, but there you go, 16%. So in terms of the last 3 years, the S&P 500 has beaten Adobe. Now, is that something that we need to worry about? Is it the business declining, basically moving forward? And this is where this comes in. So we now need to look at what the analysts are saying about this company moving forward, because you know, if things are changing in terms of digital content creation side of things, we need to be able to kind of have some understanding of where this business is heading, because we've already seen it, right? So we've seen this sales growth, which is absolutely wonderful. But now what we need to see is what is the expectation for moving forward, and that for EPS 12%, double digits every year for the next at least 3 years, 4 years, which is absolutely fine. So even if you just look at the first 3, 12%, 12%, 15%, almost 14%. Then you've got, in terms of revenue side of things, okay, you've got 10%, again double digits, from $21 billion to 20, almost to 4, 26.8, $30 billion, 33. So it's heading the right direction. So it doesn't seem it's going to slow down anytime soon. Of course, AI might have some impact. If they're smart enough and integrate that part of AI into their thing, will be great. They've already started with the Firefly side of things. So it'll be interesting to see. And now the prices, I'll show you quickly. According to Seeking Alpha, it's $622 per share. That's 20% upside from where we are now. So it's absolutely huge. Let me see. Looking at Simply Save Dividend, as you can see here, $627 per share is where they think the price should be. And their expectations for future growth, earnings growth rate of 17% and EPS growth rate of 17% as well, almost 18%, which is quite nice. So everywhere I look at it, this company is actually solid business, is doing well. We just need to figure out what's going on in the future. So taking all of that into consideration, okay, we've got the Morningstar valuation, we've got Simply Wall Street valuation, Seeking Alpha. I've also used my discounted cash flow model to give me a $499 per share. That gives us $590 per share right now. Current price is $516 per share. That's 14% upside from where we are now. Now, if you say, okay, I want a 10% basically just to be on the safe side, you still basically still a buy. You might want to say, okay, this is huge risk because of AI and so on. That's 15%. So you just have to wait for the company to drop a little bit more, maybe another 5% or so. Then you can potentially, and that's not, you know, far from where it is now. 5%. It could be just a couple of difference of a couple of days if the markets come down. So it's really solid business, and I really like it. Below 500, I genuinely think it is, you know, a buy, because remember it went up, I think 490. For me, I stayed around 450s. I would be really comfortable. I will start a really big position of this company if it hits around 450 and then leave it alone. Unless the fundamentals change, unless my thesis change for this company, unless we found out AI is definitely going to demolish the revenue for this company, then of course that's going to be a huge difference. So what I'm going to do, inshallah, I'm going to add it to my portfolio. If it is around 450s, I'm going to leave it alone for now. If there is a pullback in the market, which can easily happen, I will definitely add to this company, inshallah, to the portfolio. And as always, of course, I will share that with you all. I'll let you know, inshallah. I sold it around 450s. If I can get back in around that time, that price will be absolutely wonderful, inshallah. Anyway, as always, I just wanted to share with you guys my view. Again, as always, this is just for entertainment. Please do your own research, and don't forget to subscribe to the channel and click that like button. Join us in the Patreon account where you get access to the Discord and everything else. I hope you're enjoying the content. Ramadan Kareem again. Have a wonderful day. Assalamu Alaikum.